If the words Multilife case make you think mounds of paperwork, complexity, and uncertainty, this episode is for you. Many financial professionals avoid these opportunities because they've never seen what a successful Multilife case actually looks like. Today, we're breaking down a real client case, exploring why the financial professional chose a Multilife solution and how Penn Mutual's accelerated Multilife platform, aka AMP, streamline the experience and the lessons you can apply the next time a similar opportunity comes your way. By the end, you'll see why Multilife Sales may be much more approachable than you thought.
Life Matters, a Penn Mutual podcast for financial professionals.
Welcome to another episode of Life Matters, a Penn Mutual podcast. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. Now, most of you know that the business marketplace is a real passion of mine. I just think that there are so many great opportunities out there for financial professionals to work with business owners and their businesses. One of the things that often comes up when we're talking about businesses and life insurance is Multilife Sales. So to talk about Multilife Sales, we invited two experts on. We invited John Hutchinson, who's a financial professional here in Southern California, and Mark Jones, who is our Director of Multilife Sales, to talk about a case that Hutch placed with Penn Mutual earlier this year, and that Mark was really helpful in guiding Hutch through the process. So without further ado, let's get to Hutch and Mark. Hutch, Mark, thank you so much for joining us here on this episode of Life Matters, the Penn Mutual podcast. I'm so thrilled that you were both able to join us here today.
Great to be here, Bill. Thanks for having me.
Thanks for having me, Bill.
All right. Awesome. All right. So you're both first timers to Life Matters, a Penn Mutual podcast. And so we want to make sure that the audience knows why they should listen to you. Hutch, why don't we start with you? Tell us who you are and what you do.
Sure. John Hutchinson, affectionately known as Hutch around the industry. I am a life insurance producer. Been selling with Penn Mutual for a long time, but also owning with Penn Mutual for a long time as a mutual policy holder and therefore part owner in the company. Own both whole life and IUL with Penn Mutual. And I do a lot of online marketing in terms of sharing the benefits of whole life. And although we are independent brokers, we do a lot of business with Penn Mutual.
Yeah, for our listeners, he's so much known as Hutch that I was on a call with him and somebody called him John and I didn't know who they were referring to. That's how Hutch he is. All right. Mark, who are you and what do you do?
Well, you said I'm the first time on the podcast, but I'm a long-time listener, first-time caller. And I am the Director of Multilife Sales here at Penn Mutual. So that means I am kind of doing a little bit of everything as it comes to promoting and helping advisors understand what our product and platform is, running illustrations, answering questions. I wear a lot of hats, but really, ultimately, it's about getting the FPs comfortable and used to what we have to offer and help them with their opportunities.
All right, excellent. So I queued it up at the beginning, but we're going to be talking all about Multilife. And Hutch, the reason why we had you on for this episode is that you were actually the financial professional for our first case that went through the AMP system. AMP is an acronym for Accelerated Multilife Platform. Let's set up a little background for that case, and then we'll discuss some of the details on why Penn Mutual and AMP made sense. First of all, give us a little insight in regards to the client, what needs that they were solving for, and why Multilife made sense for them.
So like most of our clients, the individual client who was already a Penn Mutual policyholder actually came through our online channels, bankingtruths.com, started trying to just absorb content to learn how to use whole life insurance and then to assist with retirement later. And it turns out he was a CEO of a tech company and started wondering how maybe the same structure that could benefit him individually using whole life as a buffer, using whole life as a better liquidity tool with obviously tax advantages and protection benefits, how that could perhaps benefit his company. So he reached out to, we have different agents on our team, reached out to his agent. The agent pulled me in. I didn't interface with the client individually during his onboarding and just helping him individually. And so I was brought in to talk about how a similar structure could be used for the business, but instead of just him personally, and obviously he's the CEO, so he would be part of it, ensuring a suite of the top tier employees.
So, was this something that they had been considering for a while, or is this something that really just came up when you interfaced with the client?
Yeah, I don't think it was something that they had been considering for a while, but they did have a problem. And I will say it was a very unique structure. And so I don't want listeners to get bogged down because it was something called an ESOP, which is essentially a company that is owned by the employees. It's actually an advanced form of qualified. It's a qualified plan, basically. The company is owned by a retirement plan to defer and potentially avoid taxes. But they had the problem that most companies have the same problem of how do we recruit, retain, reward our key employees? And how do we do like a pinball going through a machine and lighting up lots of balls? How do we get life insurance maybe to help handle all of that simultaneously? So specifically with this ESOP structure, what they realized is they had this runway of employees retiring, especially key employees, and having an obligation to them. And whether other companies do or they don't, they have to realize that employees are like the most valuable asset of the company. And so if you don't to take measures to recruit, retain, reward, and retire these key employees, other companies may. And so they already had a structure in place with this ESOP where they were going to have to pay out these employees, and they were already saving in mutual funds on the company balance sheet, which is unique, but they realized the volatility, even though they were getting a nice return. And so they were concerned that one, if they were saving enough money to meet these obligations to the employees, and two, if employees were retiring where there was a lot of volatility, a mutual fund only strategy wouldn't be sufficient. And so I realized by talking to a lot of business owner clients, once they understand the concept personally, a lot of the same things apply to almost any business. And businesses in general are very heavily cash allocated. So if you're going to have a bunch of cash, why not do what the banks do? That's our tagline. Don't do what banks say, do what they do, and wrap that in life insurance.
So, real quick recap because there was a lot there. This was an this is an ESOP owned company, and for you, the listener out there, and I'm pointing at my camera for those of you that aren't on the YouTube channel, but I'm pointing at the camera again. For 20 years, I've been out there talking about how ESOP owned companies are good potential sources of life insurance sales, and people always groan because ESOPs are painful. They take a long time to set up, but this was a company that was already an ESOP. So the painful part has already been done. So you went in, company's already owned by an ESOP, and you're basically talking to them about the repurchase liability and potentially some executive benefits on top of that. Is that kind of it in a nutshell?
That's it. And for the listeners out there, at the end of this podcast or at the end of discussing this, I do actually have a case that I'm working on right now that's more traditional family owned business, successful, lots of employees. So just understand that, yes, this was a very specific and unique kind of company, but the same overarching themes do apply.
All right, very good. So, Mark, we kind of glossed over this, but we said this is a episode that is focused on Multilife. And not necessarily all of our listeners are going to know what we're referring to when we say Multilife. So when somebody comes to you and says, I've got a Multilife case, what is that to you and what does that mean for the financial professional?
Yeah, it can be simple. But really a lot of times the way I like to describe it is the concept, the sales concept, like an ESOP. Maybe it's an executive bonus plan. Maybe it's a deferred compensation plan. The concept needs to line up with the reason and rationale to utilize life insurance as the funding vehicle. And so, whether it's individual life, or if it's multi-life, which really at its basic definition is just more than one life. Our platform is really built for 5 or more lives, is where a business owner is utilizing it as a company asset on the insurance side because they have one of those plans and concepts in place, or they are sponsoring it for their employees, like an executive bonus plan where the individuals own it, but you have a corporate payor. Again, it's really where the concept meets the product. And what's great about our product and platform is we make doing multiple lives really, really easy. I think you coined the term, we ACEified the multi-life business, which means that really our platform is completely digital and makes it a lot easier than the old-fashioned way of doing it through a paper process.
Mark, I think I just learned something new because when I started with this, it was 10 lives. Is it now 5?
It depends. So we can do 5 lives either through a simplified issue underwriting versus guaranteed issue underwriting, which starts at 10 lives. And the other caveat where we can start at 5 lives if you are doing a qualified plan, which starts at 5 lives and guaranteed issue with those 5 lives. So a little bit different than the ESOP that you did on that very first one, the qualified plans that we're talking about. But there's reasons for and financial professionals out there that do and place life insurance inside of a qualified plan. And there we can start at 5 lives. Yep.
As a producer, I'd just say that's really the value proposition. So obviously underwriting is going to be one of the bottlenecks when you sell life insurance for a living. And so when you have a company that's doing, like Mark mentioned a lot, whether it's split dollar, whether it's executive bonus, whether it's deferred comp, whether it's qualified plans, possibly even a large buy-sell agreement, any kind of business-sponsored plan, if you have 5 lives, you can go through a simplified underwriting process. If you have 10, it's guaranteed issue, that's just amazing. And when he mentioned the ACEified, Penn Mutual is one of the first companies that came out with the AI underwriting, for lack of a better word. Nowadays, you see the Ethos commercials and it's like, wow, I don't even need an exam. Penn Mutual started doing that in 2018, 2019. And it revolutionized our business in that when you had insureds that were healthy, didn't have a lot of history, medical history, they were getting ushered through and approved for up to, back then was $5 million, now up to $10 million without an exam. And so what the Multilife does is it further simplifies that at the business level with multiple employees. And I can tell you, and I don't want to jump ahead, but the process was amazingly simple.
We'll get that in a second. Just a real quick correction there.
Okay.
ACE is not AI underwriting. It's accelerated underwriting. We want to make sure to be accurate on that. That's a very sensitive subject for a number of state regulators. So accelerated underwriting, not AI underwriting. All right.
My deepest apologies.
That's quite all right. Well, actually, I did want to ask one follow-up question to Mark there, because we use the term simplified underwriting and guaranteed issue. What do those mean for somebody that hasn't done a case like this one?
Yeah, that's a really good question. Simplified issue underwriting is in between what full underwriting would be and what guaranteed issue underwriting would be. So guaranteed issue means you're really getting asked 3 questions on our platform. Whether you're actively at work more than 30 hours per week, have you missed more than 5 consecutive days? And that reason is for medical reasons. And then whether or not you are a smoker or a non-smoker, to identify whether or not you get a tobacco or non-tobacco rating. But really, guaranteed issue is just those 3 questions. So you think about approval process from the underwriting perspective, very quick, very easy. Everybody gets that guaranteed issue underwriting class. And when you think of the in-between, what is simplified issue, it's shorter and more condensed than going through full underwriting. But there are more questions involved. It's how we are able to manage from an underwriting perspective, going down below 10 lives, or If you want to do higher face amounts with lower lives, simplified issue can get you there. But you do have to answer more questions, and it gets you a little bit closer to full underwriting, but it kind of rests right in the middle. Guaranteed issue is the one that I would recommend targeting because it makes everyone's lives administratively so much easier.
Completely agree. All right. I'm going to ask you a Penn Mutual related question here. And then, Hutch, we're going to dive into the case a little bit more here after I ask Mark this last question here. So I mentioned AMP earlier. Can you give the 60-second commercial in regards to what AMP is? And then I'm going to have an immediate follow-up here. If somebody, for some reason, isn't able to use AMP, are we able to do multi-life cases for them outside of the AMP system?
Yeah, my elevator pitch, right? That 60-second version of what AMP is. It is our solution, to the multi-life space where it's completely digital, accumulation focused. We're not looking for, term-like solutions. We want the plan that's in place to be something that they're looking to put and design heavily funded life insurance policies together. And it brings a platform from an underwriting perspective, but also policy in force perspective where everything's digital, everything's online. The insured is getting an email to answer the consent to insure questionnaire. And then the last little leg of the stool behind the platform is the products. We are utilizing our accumulation whole life, accumulation IUL, and accumulation VUL. So we'll have all three of our accumulation products on the platform as well. If you don't have the number of lives, if there's reasons to go away from the AMP platform, as Bill was alluding to, is there a way to go full underwriting in a multi-life sense? You can. And sometimes that rationale is you need larger death benefits than what our guaranteed issue parameters allow. And as long as you let us know, we can take somebody through a full underwriting process on the front end, and then package everything together for reporting and policy administration on the back end. But you have to let us know so we can prep that, get everything set up in AMP correctly, and then flow it through a full underwriting process where they would be doing that more onerous underwriting. But there's reasons to do that. We're hoping we don't see too many of that just because everything makes sense to do guaranteed issue and we've got enough lives. But yeah, we do. And those hopefully, minority of instances can do and pivot away from guaranteed issue or simplified issue.
Quick question, Mark. Can a business mix and match? You had talked about, the three different products. Does it have to be all a whole life, all IUL, all VUL, or can a business mix and match amongst the different employees?
Yeah, it's one of the great things about our platform and sort of solution here is that you can. Behind the scenes, what you would see is different plan IDs when you're logging in to let's say look at the cash surrender values of those three plans in order to see how much in total there is. You're going to look at three plans, but those get aggregated up as like a master case ID. So you can. It would just the nuance behind the scenes is that you would have three different plans underneath a master case that gets reported together.
Just to kind of get back to what you were saying, Mark, I mean, we like to say that we want to meet the financial professional where they want to do business. And so we want to make sure that we can do a case however the FP wants to. And that's really important to us. All right. So Hutch, back to you.
Yeah.
This case that we referred to earlier, was that your first ever true multi-life case that you had worked on?
No, but it was by far the most let's just say tech forward, tech friendly one I'd ever worked on. It had been a little while since we'd done a true multi-life case, and it was, it's supposed to make things easier, but I will say that it all the additional complications that were just cut out through the AMP system really left a nice taste in my mouth to where I'm hungry to find more versus the other one, the fatigue that set in after doing that was like, oh, it was a great case, but I don't know if I want to do that again.
So I guess that leads perfectly to my next question. What is it really that intrigued you about AMP? Was it kind of the paperless nature? Was it the ease of doing business? What attracted you to working with Penn Mutual for this case using the AMP system?
Like I said, it was probably going to Penn Mutual anyway because the client was already a Penn Mutual policyholder. They wanted primarily a whole life solution. Penn Mutual is right there in terms of top performance, and it was a cash value based, performance based, let's just say design. And truth be told, we started thinking it was going to be the old snail mail type multi-life underwriting case. And then we were alerted that you guys had this in development, and we were, let's just say, heavily encouraged to jump on board and be the guinea pig, for lack of a better word, with the system. We weren't sure because we had to kind of pause. We could have closed it a little earlier at year end, but Mark showed us how like the client would actually benefit because of the economies of scale and the efficiency of the AMP system, the performance of the guaranteed issue product was a little bit better, and the client only needed to wait a month. And that we were assured as producers that we would be very, very happy with our choice on the admin side. And I can say all of those things were confirmed.
Yeah. And speaking of waiting, I think one of the reasons why you also were waiting was when this case first came up, we did not have whole life available as part of the AMP platform. But we did by the time, obviously, you placed it, and that's the product choice that you went with. Why did whole life make sense in this particular case for you?
Like I said, the client had already gone through our online channels, and we are product agnostic where we do talk about whole life and IUL. But the client liked the stalwart guarantees. Again, they were investing in mutual funds like already. And so a watered down IUL version or even a VUL, like the tax wrapper of VUL, which I'm not licensed to sell, but the other agent was. It didn't make sense because the ESOP is already a tax wrapper. And so essentially they already had the tax wrapper of an ESOP and they had pure mutual funds. So they were really looking for the stability, control, predictability of whole life, albeit with the high performing chassis that Penn Mutual has on both the non-guaranteed issue side and the guaranteed issue side.
All right, Mark, before you joined Penn Mutual, was it about a year ago now? It's almost a year, right?
In about 6 weeks. Yeah, I'll hit my first year anniversary. Yeah.
Wow. Time flies.
Time flies.
Well, before you joined Penn Mutual, you worked for what we call Strategic Alliance, a big producer group. We won't name which one it is, but we'll say that it is a single letter. And obviously you had a lot of multi-life cases that you worked on when you were working for that single letter Strategic Alliance. How does the AMP platform compare to some other carriers' multi-life offerings out there?
Yeah. So when you think about it competitively against what the other carriers are doing, and really, actually, what you're seeing right now is people are catching up. You're starting to hear from different carriers who are launching their own platform. But I think that we sort of led the pack here in digitizing it, making it that enrollment experience be completely online. That really is a pain point, especially for the administrative staff trying to manage all that paperwork. So kind of like what we did in revolutionizing the individual life space with ACE and taking that to a digital experience. You know, we were one of the first ones with a completely digital experience on the multi-life side, which I'm proud of. And one of the reasons why I took the role and came to Penn Mutual, because I was really excited about being a part of something new and what they were doing here, what we were doing here.
So, Hutch, you mentioned this already, and this is kind of where we're going to dive into the second piece here. The question that I had originally written was, do you anticipate pursuing more multi-life opportunities going forward? But before we even started here today, you said yes, and that you have an actual case that you're kind of working on right now. And so wanted to get a little insight there, talk through that. And then second piece is for those people that are listening and that haven't done a multi-life case in the past, what advice would you give to them?
Sure. Let me do the second one first, because
Okay.
I may open up a whole can of worms with the case. I'm happy to. I have exclusive Bill Bell access right now, so I have loads of questions, and I think it'll be a really cool part two to this podcast, just to talk about the different business uses of life insurance and the different ways to skin the multi-life cat, if you will. But the advice I would give is reach out to the professionals, reach out to Mark. Just talk about the case. Like he said, he's used to, for the producers out there, he's used to working with us. So he understands our language. And so he was really, really great to work with in terms of just kind of framing and helping design or talk about the different, let's just say, walls of the sandbox, depending on the type of case it is. I do just want to echo from a tech standpoint, it was really awesome and worth the wait in terms of going to, like, when you deal with multi-life, there's two ways you can go. You can chase down every individual employee, or you can deal with one point of contact. Like we were dealing with the CEO, then we met the CFO, and we just dealt with them. And so the tracking system of the AMP allowed us to see and have optics of which employees had done what they needed to do, which one needed a nudge. And we didn't have to interface with any of them directly. They were able just to go and do the DocuSign in their portal. We had very easy optics to see who had done what and who hadn't and who needed a nudge from the CFO. And now that all the policies are enforced, like Mark was talking about, we can see everything aggregated as one case, almost like one policy, one illustration, one admin portal, or we can unpack and unbundle that any way we want with the individual policyholder. So it's really, really streamlined. So my advice is you'll learn about that as you go. If you have a case, you have a 5 life case for simplified or a qualified plan GI, or you have 10 lives, especially after hearing some of the questions I'm going to be asking Bill, reach out to Mark and see what he's got for you. That would be my advice to producers out there.
All right. Well, let's dive into the case here a little bit. We're not going to go into too many details because we do have limited time here today, but I am intrigued in regards to what's going on. So let's chop it up a bit.
Sure. Yeah. So similar to the first case, this is a client. This is somebody who became a client, learned about us through our online channels, bankingtruths.com, started implementing some policies personally, had some 1035s from another carrier that really was performing in a lackluster manner, was able to shrink wrap that. Truth be told, we did use a couple carriers, Penn Mutual being one of them. And we were planning on asking them, because they are a CFO of a fairly large, we'll just say, construction company back east. And it turns out I didn't know much about the business itself. Turns out it's also family owned. And so it was interesting. We were on a call just kind of finalizing really phase 2 of their personal build. And I was planning on saying, hey, oh, by the way, your CFO for this company, you really like and enjoy and understand these strategies. There's a way to potentially implement this at the corporate level, really not knowing much about the business itself or the business fact pattern at all. And it turns out he was bringing the same question. So most people are familiar with Jim Harbaugh and University of Michigan using the split dollar program. We had published a video about that when he moved from Michigan to the Los Angeles Chargers. And he was like, hey, is it possible maybe to set up one of those Harbaugh type plans? And that's where I really said, and this would be my advice to other producers out there, and where I want to get advice from Bill is to keep it really, really simple, because that's the way the clients think about it, is just a business sponsored plan. And at the end of the day, it doesn't matter whether it's company controlled deferred comp, employee controlled executive bonus, or some kind of hybrid like a split dollar loan program. Most people aren't using split dollar endorsement anymore, but it's kind of a hybrid where it's like, who really owns and controls it? All of those details, you should work with the professionals. But he was interested in actually bringing this upstream to the CEO, to the suite of owners, which I found out later was a family that also has some potentially equalization issues. So there's a G1 where I believe the original founder had passed away. And so it's just the spouse, still an employee, main owner, as well as several children in the business that are late 50s to early 60s. And some of those children have their children in the business, and some of those children aren't as involved and don't have children in the business. And I thought to myself, there's just so much going on here. So my client is obviously looking to have a plan where he feels, rewarded and retired, the R's that we talked about. But the family itself also has this estate equalization family business issue, potentially even buy sell. And so I did kind of share some of those concerns with the client and just said we go back to the lab. And just like I'm encouraging listeners to reach out to the professionals, I'm on a podcast with the professionals.
So I was going to just kind of jump in there. There's a lot of opportunities there. And I think that you're probably looking at 3 or 4 separate cases altogether here. I mean, you're looking at probably some sort of executive comp. And I'm not sure that necessarily a Harbaugh designed split dollar is going to make sense, especially in a for-profit company. We generally see those in nonprofits.
That's exactly what I told them, is because it was easy for Michigan. It's kind of like my ESOP strategy. When a company loans money, they don't want to eat the tax, and they don't have to agree with University of Michigan or ESOP. And so it's probably going to be one of the others. I already kind of planted that seed.
So probably you're looking at a restricted executive bonus or some variant of a SERP. But that's probably what you're looking at for your non-owner executives there, which it sounds like there's probably a pretty sizable pool of those. For our owners, you're looking at, like you said, estate equalization. There's definitely going to be an opportunity there, and that's going to be outside of the multi-life sit base, but you're definitely looking at maybe some life insurance may be paid for by G1 that's owned by G2, either through loans or through gifts or something along those lines. You're probably looking at some buy-sell strategies in regards to the actual owners, so that when somebody does leave the business or passes away, that you have the ownership that's passing where they want it to be at the end of the day. So, I mean, that's just 3 right there. There's probably some other stuff there. Maybe they have a need for a qualified plan or a cash balance plan. That might be an option there as well if they haven't already put one in place.
I think they have a qualified plan. They have a lot of employees, a lot. So I don't think it's going to work out. But let me just ask you. So first question, high level, and I don't know if this is a Mark or a Bill question, but let's say they did, like you said, like some kind of executive comp, whether it be restricted bonus or deferred comp, depending on whether the company wants to own and control the policies or whether they want tax deductions that are fine, bonusing out the money. Can that be combined with some of the other plans to kind of roll up to that 10 number? Because the family were only at 5 and I maybe even 4. And so I don't know if that would qualify for multi-life on its own. Like, can it be combined somehow?
It depends. Usually, the combination really is what entities you're working with, right? If there is a business that's sponsoring it, whether it's corporate owned or corporately sponsored, and let's just say, pulling things out, if there's let's say that there's a deferral plan and they're using corporate owned life insurance, and you said, well, we do have key person needs for a group of employees as well. And can we combine those 2 things together? Absolutely. It makes total sense there, because you can, it's all corporately owned, and you're ensuring, a level of the executives, and there's a whole, separate need for providing coverage there. If you're combining, your specific case, it may not be the thing that would be teed up perfectly, but let's say you're combining corporate owned and corporate sponsored. It'll depend. Facts and circumstances are always the most key thing. So let's say you had, a group of only 5 lives that you would do a corporate owned solution for, but you had a group of 30 that you wanted to do corporate sponsored executive bonus. Then I would say that is, not to give 100% certainty, but like a definite strong maybe, right? Because we've got the 5 over here, we've got 30 here. we can give 5 guaranteed issue on these 5 because really it's all that same entity that's putting the plan together. So again, facts and circumstances always, leave it to be a maybe, but that's what I just described as a very strong maybe, and likely doable from our perspective.
Wasn't Definitely Strong maybe the name of Oasis's second album?
Bill, curveball question for you. So let's just say we did the buy sell on an island unto itself. Most plans these days aren't doing it at the company level so they can get the increase in basis. I know one of the strategies to simplify, like with cross purchase, like if you say have 4 employees rather than do 12 policies, right? Like everybody has a round robin. They're creating a separate LLC, which could also tie into estate planning or turn into like a company lending / leasing company that's kind of on an island unto itself. It does make sense to set those up and only do 4 policies on the key employees. But now I'm under the guaranteed issue. Do I get there if it's only 4 bodies and 12 policies? If I do the old school cross purchase, it's curveball, I know, but these are some of the things that came up. Is it weak? Maybe Oasis's 5th album, perhaps?
I'm gonna say that that's going to be a little more of a challenge because it's not going to be corporate sponsored in that case. It's going to be related to the corporation, but they're probably using their own after-tax dollars to pay the premiums rather than like a bonus or loans from the company. What you were referring to earlier with utilizing the partnership or LLC is what we call PAS, Partnership Administration Succession Strategy. And that's probably what I would encourage them to look at here. The other thing that we haven't talked about is when you're talking about an SI or a GI case, there are caps in the amount of death benefit. And for a successful family-owned business, it might behoove them to still go through full underwriting on that case for at least the buy-sell component. Executive comp, maybe, probably, definitely strong, maybe on the GI or SI for the executive comp, but everything else probably you're still looking at a fully underwritten case.
That makes sense.
And we do, to answer directly, we are looking at lives, the different lives, and right, like all those things. So we're not talking about policies, we're talking about the number of lives insured when we talk about the 5.
Makes sense. Hence the name Multilife, not multi-policy.
Mark, we're going to end the podcast with a question for you. If one of our listeners has a case that they think might be a good multi-life opportunity and they want more information on AMP, or they just want to run the case by somebody that's an expert in this field, what's the best way for them to proceed?
Reach out to their local Penn Mutual wholesaler. Start with that team. If you don't know who that is, certainly you can reach out to us, myself, or the advanced sales team. My direct line is 215-956-8880, and my email address is jones.mark@pennmutual.com. So either work with your local wholesaling team. If you don't know who that is, you can call me or email me directly, and we'll get you acquainted with them and talk about the opportunity that you have.
Very good. And you can also always reach out to the advanced sales team at advancedsales@pennmutual.com. Somebody from the team will certainly get back to you if you have a question on, hey, does this make sense? How do I get a hold of Mark? Do you know any more about the Oasis song catalog? We can answer any or all of those questions. So feel free to reach out to us as well. All right. Great conversation as always, guys. Really appreciate it. Hutch, Mark, thank you so much for being our guests on this episode of Life Matters, a Penn Mutual podcast.
Thanks for having me, Bill.
Thanks for having me, Bill. Appreciate it.
All right. Well, thanks again to Hutch and Mark. Just 2 great guys. I've known both of them for quite a while here. I couldn't think of 2 better people to talk about Multilife and the AMP platform. If you have a question for me or for Hutch or for Mark, you can send an email to our special mailbox, which is lifematters@pennmutual.com. That is a special mailbox that only I have access to, and I do respond to every email that is sent there. One last time, that is lifematters@pennmutual.com. Now, I referred to it during the actual podcast itself, but if you haven't checked out our YouTube channel, what are you waiting for? There is so much great content there. We have episodes of this show. We have YouTube dedicated shows that we are publishing there all the time. Just go to YouTube, type Penn Mutual in the search box. It will bring up the channel. Smash that subscribe button while you're there. Make sure to check out a bunch of the content. Like some of the videos if you have a few seconds. Would really appreciate that. There's so much great stuff on the Penn Mutual YouTube channel. Speaking of subscribing, if you haven't subscribed to this show on Apple Podcast or Spotify or wherever you get this podcast, make sure you do so you don't miss any future episodes of the show. We have a lot of great guests lined up for the remainder of 2026. And finally, again, if you are a subscriber, especially on Spotify or Apple Podcasts, stop by and leave us a review. A star review only takes a few seconds and it helps to boost visibility of the show. If you leave a written review on Apple Podcasts, I'll be your best friend. So for Hutch and Mark, I'm Bill Bell. Thanks again for joining us here today, and I look forward to talking to you again soon.
Thank you for watching. If you enjoyed this video, don't forget to hit that subscribe button and turn on notifications so you never miss an update.